Hey everyone, welcome back to Corporate Decoder, the place where we unpack the secrets hidden in plain sight in SEC filings, and tonight we are diving into Augusta Gold Corp latest proxy statement, a document that tells us not just about gold, but about who's buying and who's selling and for how much. Get ready for some serious financial decoding before we jump in. If you enjoy these deep dives into corporate filings, hit that subscribe button, and also join our Discord server linked below for more exclusive content and community insights. Our story today is about Augusta Gold Corp and a crucial upcoming special meeting of its stockholders. They're voting on a major deal, a proposed merger that will see them acquired by AngloGold Ashanti for cash. Think of it as Augusta Gold becoming part of a much bigger company and stockholders getting cash for their shares. We're going to break down what this means for everyone involved, especially the financial details. First up is Augusta Gold Corp itself. They are an exploration stage gold company focused on developing two key projects, the Bullfrog Gold Project and the Reward Gold Project and the Reward Gold Project. In Nevada, right now they're not mining anything and they're not making money from operations. They're in the business of looking for and advancing potential gold mines. Augusta Gold has mineral reserves for its Reward Gold Project, is still in the exploration phase. On the other side of this deal is the AngloGold Ashanti Group. They are a big global gold mining company with operations all over the world. Think of them as the major player here, and Augusta Gold is the smaller company being acquired. It's a pretty standard reach or gain access to promising resources. Now let's talk about what the stockholders will actually get. If this deal goes through, each share of Augusta Gold will be bought for C1.70 in cash. This is a fixed price, no funny business here. And importantly, if you hold on to your shares, you won't own the combined company, you just get cash. So why is Augusta Gold selling? Well, according to the company, the merger consideration offers stockholders a chance to get value for their shares while avoiding the big risks that come with funding new mine construction. Building mines is expensive and risky with potential for dilution from future share sales and the general ups and downs of commodity prices. Plus, there's the inherent risk in developing and operating mines. Becoming part of AngloGold Ashanti means they get to leverage the bigger company's resources and expertise. To make this deal happen, Augusta Gold needs its stockholders to vote in favor of the merger at a special meeting. They're asking for votes on three main things. First, the approval of the merger itself. Second, a non-binding vote on certain compensation that the company's top executives might get because of the merger, which is often called a say-on golden parachute. And third, they're asking for approval to adjourn the meeting if needed to gather more votes. The Augusta Gold Board of Directors and their special committee are strongly recommending that stockholders vote yes to all three proposals. They've looked at the deal, consulted with financial and legal advisors, and believe the merger is fair and in the best interest of the stockholders, excluding certain related parties. It's important to note that the company's directors and top executives have interests in this merger that might be different from those of the average stockholder. These interests include things like accelerated vesting of stock options and severance payments, which are all laid out in detail. Here's an interesting detail. All the directors and top executives of Augusta Gold who own shares, along with a major shareholder, Augusta Investments Inc., have signed a voting agreement. This means they've promised to vote their shares in favor of the merger. Together, these supporting shareholders hold a significant chunk of the company, about 31.5% of the outstanding shares. This is a pretty common way for companies to ensure a deal gets approved. Now let's get into the numbers, the financial tables that really tell us the story. Keep in mind, Augusta Gold is an exploration stage company, so we're not looking at profits here, but rather at how they're spending money to find that next big discovery. Looking at the 6 months ended June 30, 2025 compared to the same period in 2024, Augusta Gold slightly reduced its overall operating expenses. General and administrative expenses went down by about 9%, which seems mostly due to lower share-based compensation, likely because a large stock option grant vested in the prior year. Exploration, evaluation, and project expenses also decreased by about 32%, primarily due to consultancy, and contractor expenses also decreased by about 32%, primarily due to consultancy and anticipation of the merger or due to funding considerations. When we look at the full years, the trend of lower expenses continues. General and administrative expenses dropped by a massive 49% in 2024 compared to 2023. This significant decrease was mainly driven by lower accounting, legal, and professional fees and a large reduction in share-based compensation. Exploration, evaluation, and project expenses also decreased by about 30%, likely due to less active exploration work year over year. The company's total operating expenses decreased from about 7 million in 2023 to 4.3 million in 2023, indicate Iktevik ESAs also decreased by about 30%, likely due to less active exploration work year over year. The company's total operating expenses decreased from about 7 million in 2023 to 4.3 million in 2023 to 4.3 million in 2024, indicating a significant cost management effort. However, it's crucial to see the bottom line. The net loss for the 6 months ended June 30, 2025, widened to about 3.5 million compared to a net loss of 3.1 million in the same period last year. For the full year 2024, Augusta Gold reported a substantial net loss of 6.6 million, a significant swing from the profit of 6.7 million in 2023. This highlights the challenge of operating as an exploration company where expenses are high and revenue is non-existent. Their mineral properties net value stands at about 58.5 million as of December 2024, which is a slight decrease from the previous year. This reflects ongoing investment in their exploration assets, even as operating costs are being managed tightly. Now, let's talk about those mineral reserves for the Reward project. As of December 31, 2024, they report 164,000 ounces of proven gold reserves and 205,000 ounces of probable gold reserves, totaling 370,000 ounces per ton. It's important to remember these are estimates and their actual economic value depends heavily on future gold prices and the cost of extraction. The company's board is recommending a vote for the merger proposal, the advisory compensation proposal, and the adjournment proposal. This unified recommendation from the board is a strong signal to stockholders on how to vote. All directors and executive officers owning shares have also agreed to vote for the merger. Now for the ever-important risk factors. Augusta Gold acknowledges that there's no guarantee the merger will even be completed. Many conditions like stockholder approval and regulatory approvals need to be met. If the deal falls through, the company faces several risks, including paying a hefty 3.6 million termination fee to AngloGold Ashanti and a potential drop in its stock price if the market had priced in the merger completion. The interim operating covenants in the merger agreement also might stop Augusta Gold from pursuing new opportunities without parent-specific consent. Plus, the voting agreement means directors and executives can't easily support a better deal from a third party if it conflicts with the current merger, and that fairness opinion from their financial advisor National Bank Financial is only valid as of its delivery date and doesn't account for any future changes. Looking at executive compensation and how it lines up with company performance is always a key area. For Augusta Gold, they're showing a disconnect. While their net income went from a loss in 2024 to a profit in 2023, then back to a loss in 2024, they're a profit in 2023, then back to a loss in 2024. Their executive compensation paid to other named executive officers followed the same pattern. This lack of clear correlation between financial performance and pay could be a point of concern for investors, though. The company argues stock options align executive interests with shareholders by tying value to the common share. For investors, though, the company argues stock options align executive interests with shareholders by tying value to the common share for investing periods. So what is the story here? Augusta Gold is moving towards being acquired by a larger player, AngloGold Ashanti, for cash at C170 per share. The deal has strong support from the company's leadership and key shareholders. Financially, the company is still in the exploration phase, burning cash and showing losses, but this is typical for its industry. The main narrative is the acquisition itself and the value it delivers to stockholders, while absolving them from the future risks of mine development. The key risks are the deal not closing and the inherent uncertainties of exploration. Overall, Augusta Gold has managed its course fairly well given its stage, but the path forward without this merger would still be challenging and capital intensive. The merger offers a clear exit for shareholders and a potential end to the company's exploration phase. What's your take on this deal? Is C170 a fair price? Let me know in the comments below. If you found this breakdown helpful, please give it a thumbs up and subscribe for more corporate deep dives. And don't forget to join our Discord community linked in the description for discussions and more. Thanks for watching. See you next time.